Good morning. We're going to do the S&P again, but this time I'm going to do it with sound. Ta-da! Right, so what happened? The S&P has been making a top for a few months now. Well, I say a few months, 6 months. And because we've been in such a bull market, and you have to understand that by its very nature, the stock markets are bull markets by their very nature. So when they correct or have a wobble, the rest of the markets catch a cold. The trouble with it being in a bull market is that not a lot of people saw the topping formation, and when they did, it was buy dips, buy dips, buy dips. What makes this one different? Point. It's closed below the 200-day moving average, okay? And it did it yesterday. Now, we have climbed our way back above it today. The average comes in at 66.36, and our high has been 42. Just nicked it. And you can see, that at some stage, some poor little sausage bought that high. Anyway, I digress. You have the daily pivot coming in at 67.15. So that's another thing that where this market could go to, but we're below that at the moment, and really the S&P doesn't move much in Europe. It really doesn't. It is when the States come in, when Wall Street opens, then we start to move. It isn't just the S&P that's topped. It's the Dow, it's the Nasdaq, it's FTSE, it's the European stock markets. They've all topped. So where do you normally go? Well, you see a flight to quality and you go into bonds. No, because the bonds are going down as well. You go into safe haven, gold. Not at the moment. Gold is going down as well. So there is this kerfuffle going on at the moment. The dollar is by, definition a safe haven currency. But even that hasn't gone as far, if you like, as I would have thought. It probably has against the euro more than anything. So where do we see this? You can see, I can point it out to you. There's the break. There's the don't know what to do. There's Monday. We do have reversal Thursday. So it could be that little cherubs are thinking of covering shorts, which I think is what's happening at the moment at that 200-day moving average. But the mighty monthly charts are showing that March is a turnaround. Okay, so all through this for many months, those technical indicators on the monthly charts have been saying it's still a buy. It's not saying it now. It's not saying that the S&P is a buy for any length of time. So please be aware of that. And it is a case of selling into strength rather than buying weakness at the moment. I think the only buyers that are going to be around are buyers who are covering short positions. Bear that in mind, okay? And let's see how this unfolds and plays out. I'm hoping it won't be too much of a bloodbath, but I do see 6,500 in the not too distant future. Good luck.